Hey guys, this is Simon. How's the audio and can everyone see this screen sitting here? Looks good. Okay, we got the sounds. Thank you, JK. So, wow, what an afternoon. That was totally bizarre. So let's go over a couple of things from this morning and then we'll just cover the end of the day. Really, I wanted to cover more of the psychology behind what happened today versus the actual zones. I did not take any trades in this area. I was merely a spectator, and with good reason, because I think trading this is very, very hard and very frustrating. When this is OTF, if anyone's wondering, when you get bars like this, okay, this is OTF. Basically, all of this is a manager stepping in, a fund manager going, okay, we've run the numbers, we've read the statement, we've looked at the model, sell X amount of S&P 500 or whatever it was, whatever index, whether he did that through options, whether he did it through futures, or he did it in the cash market, whichever one it was, he just stepped in, and that's why we sweep down like this, okay? Also, you'll notice past Tuesday's low, I purposely didn't put any zones in this area, and I covered this morning. The reason why there's no zones in this area was because we could slip through very quickly and easily. And I also mentioned that with this area right here. I'm pretty sure I mentioned it with this area. I can't swear to it, but I know for a fact I went through this area, and I said this was going to be key today down here at this initial support. So let's look at what was going on, and then we will, in the morning that led to it. So we basically had balance in the morning. I'm going to wind this out real quick, which was expected. Normally before Fed day, that's exactly what you end up with, is a balanced day. So we opened, we moved to the downside. So this was kind of a weird move to the downside. If you looked at the price action, normally in the first 5 to 15 minutes, we get a lot of movement, kind of like what this looks like here. Let's see if I can get back far enough. Where was the open? Okay, well, it's a great example. See how big the range was and how fast the snapbacks were, even within 5-minute bars, right? These bars are 55 to 52, 57 down to 52. Look at the bars on our open today. The first bar was, the first 5 minutes was, what is this? Heck, it's not even 2 points. It's like 64 to 65 and a half. It was about a point and a half, maybe 2 points in range. Okay, so that's the first thing that tells me in the morning I'm going to probably have balance. The next thing that caught my eye was, along with this, there was a lack of rotation in all of this. We just were kind of, I know on the 5-minute bars it looks like we were moving, but this was kind of moving and just kind of clunky. All of it, I hate trading this stuff. It's very hard, and the reason why is you don't know if they're just going to sweep it down or sweep it up. There wasn't enough participation there. Although on the NQ side, a beautiful trap did set up. In addition, when we got to the top, same thing. Okay, so if you're thinking balance, the best place to enter balance trades is always on the edges, although this was an incredibly small balance. This reminds me of what we had in the middle of January, and I hate trading this stuff. It just, it's a great formula for getting nervous. Okay, so let me take a step back. The entire purpose of the reason trading the way I trade is so that I reduce or eliminate fear, I reduce anxiety associated with taking my trades, and I put the advantage of having larger rotations on my side so that the market will snap back. So we had two challenges today. First of all, a very narrow range doesn't let me take advantage of displacements in the market. If you want to know what a displacement looks like, it looks like what we had here, almost to this zone, the 1854 and 3/4, we missed by a tick. And in addition, right down here into this zone, this is displacement, right? We're so far stretched that it snaps back super fast and goes the other way. Of course, and I want to be clear, I wasn't trading it because my trade plan calls for me not trading on Fed day. I've tried it for a long, long time. Every once in a while, if we get a huge stretch right out of the gate, I'll give it a shot. But not when we get this stuff. So, long story short, it's pretty easy for everyone to see. we stayed in balance, and the closer we got to the Fed release, the tighter balance got. I want to show you what that same chart looked like on NQ over here. Okay, so here is this morning on NQ. This was Globex low. The green line was Globex low. We traded below, trapped back above. What do? We headed right for the open gap, which had remained untested to this point. We closed the gap right here, and responsive sellers came in, pushed us down below, and then we trapped one more time, and we traded all the way up to the other end of the range. Without going into too much detail, whether it's NQ or ES, traps are nice because once they're set, you have pretty easy places to locate your swing lows, and you put your stops just behind those. Okay, I go into much greater detail one-on-one in one-on-one sessions, but that's the short story on how you set up traps. You'll notice there was no trap from gap fill, and on most days, including today, I do not trade gap fill with regards to that particular day's gap fill. On gap fills that stretch well down, like we did today down here. Okay, that was a gap fill, and those I do trade, except not in the last hour, and certainly not on Fed day. Again, I hate the anxiety of knowing that this thing can rip against me. If you've ever traded, which I was trading on the day we had the flash crash, you know that these things can get highly illiquid, and it's not that I'm concerned that it'll be illiquid today. The odds of it happening are very low, but all it takes is getting caught one time. People in the last hour were getting swept for 10 points on their stops, and I just trade too big a size to have that occur to me. So these aren't my best days. Actually, these aren't my best days at all, and I lose a lot of my edge. Much of my edge is concentrated on being able to pin on large positions at high odds locations and be able to do that consistently, meaning well over 70% of the time I have a consistent profit rate, and I'm able to keep my losers very, very small. So continuing with the theme, right? We were just balancing end to end. This was pretty clear on the trap. I was actually talking to a client when this occurred, and eventually, so why are traps valuable, by the way? I want to go over this very quickly. When you highlight a trap, right, you know right away to look, even if you're not trading it, right, look to the other end of the range so that you don't get run over in the middle. Okay, particularly on balanced days, the middle is the absolute worst place to place a trade location, to place a trade. The reason for that is you have no idea whether from the middle it's going to roll back down to the bottom. Sometimes it works, as in this example, or if you shorted it right here, and when it's going to run up all the way back up to the top. The edges are always the best place. Now let's go back over to, let's flip charts back for a second to ES. Okay, so obviously same situation, we balanced right into the number, and let's go to when the number came out. So if you look at past reactions, in November we had a 10-point rotation, I believe, to open, and then a 30-point rotation up. Obviously we didn't experience that today, and what I'm normally looking for in the initial reaction is a slam down or slam up and then the reverse to take place. But look at the size of the rotation here. This is 1867 down to about 1855, right? Roughly 10 points. That's like a normal day for us. So not exactly very exciting. If you took this trade here, okay, with such a small rotation, and I said this morning when I was going over it, right? I basically would like to double the normal rotation that I'm looking for. That means 20 points look pretty good, would look pretty good if I was going to trade this. And I'm addressing this for those who were, because if you had a difficult day or you like trading the Fed, it's just not for me. But that doesn't mean, I don't try to get people to trade just like I trade. What I try to do is help people with the trades that they are doing and find out where they have their best odds and where they have the worst odds. So at any rate, I mentioned the stretch. If you look at this put us down from the original bounce at 55, took us down to 45. We had a thin market, and it pushed us all the way down to 42.50. An argument actually could have been made that you should have had support zone there, but I'm pretty confident looking at the reaction there. I got it in the right location. Now, let me remove these because these were not here earlier this morning. Okay, so a couple of things with this. The first thing that I mentioned, normally my stop, and again, this goes towards preparation for the day and making the mental adjustment for what you're trading. The trade location at the back of the zone would normally require a 2-point stop. I said what I would do is I'd either cut my position by a third or a half, and that I would double the stop behind the zones after the Fed came out. What was the reason for that? The reason for that was because of exactly this. You have more participants. Normally, I believe, given any other day where we weren't having a long liquidation here, or being in the last hour where we were getting people panicking out of the position, right? Normally, we would have found responsive buyers within the zone, I believe, and we would have rotated up, even if we traded behind, right? It took all the force that the market had with everyone pretty much panicking out to get it 2 points behind the zone. So a 4-point stop clearly would have kept you in, and on any other day, I doubt they would have had the resources to push it this far back. And I look for responsive buyers out of initial support, and that's exactly what we got. This is initial buyers. So basically what happened here in terms of the market's narrative, the market's narrative was that the news wasn't all that bearish, okay? This is what the market's telling you right here. Hey, we don't really particularly care about this. Someone, we don't know who it was, but someone with a lot of money, okay, and a large position came back after reviewing the data, talking probably with their fund managers or the whether it was a hedge fund, a pension fund, or a mutual fund, or a number of those all at the same time, and they simply said, we need to liquidate X number of dollars out of our portfolio. So imagine if you're running a multi-billion-dollar organization with multiple portfolios, and you talk to your multiple managers and you have to liquidate that size at one time, right? This is what happens. They don't care about support. They don't care about resistance. They just go, boom, we're out, and down goes the liquidation. You'll also notice on the reverse side, outside of the few individual traders that panic down here, once they're done, the pressure lifts, and we come right back. And my guess is overnight, we're going to come right back to where this started, and if we get above, we'll trade right back into the range. If we can't get back up here, it is possible to get a retest on the downside overnight, but what the majority of the market was saying when that news came out was that this is no big deal. Whoever this guy was, whether it was Warren Buffett or Fidelity or AIM funds or any of the huge hedge funds, BlackRock, whoever it was, they said, liquidate X number of dollars, do it immediately, and their trader just hit the button and it went at market. And that's what happened. And everyone who was standing in the way of this just got crushed. And I promise you, people had stops run through this thing, probably for 1 or 2 points before they got filled. Furthermore, if you look at, this was actually constructive in here. The first time down, I missed this zone. I'm not sure if I screwed this up, if I meant to put 53, 55, but I'm going to go with I had 54 3/4, and this should have been 52 3/4. I did the zone so earlier today, so I don't remember. Actually, I can tell you what it should have been, and I might have screwed it up. Let's see. We'll go back to Tuesday's low. There you go. It should have been. Oh, no, we did trade down. 52 3/4. I got it right. So 52 3/4, okay, was this zone. We came within a tick of this zone. If you've been following me for a while, whenever we come within a tick, I consider that a first touch, particularly if we get a big rotation off of it. That means I only have 2 places left to trade a zone if I'm going to trade it. It would be the second touch, and it would be right at the back of the zone, and I normally do not take it. Once you saw this break, it was really kind of nuts to step in on this at all. Without a larger rotation, again, consider 20 to 30 points is a normal Fed day. Okay, sorry about that. So then at the end of the day, think about the trap situation, right? You had all these guys who liquidated right here at the bottom, and then they rotated back up and just squeezed them right out. This is all a combination of shorts who got run over, and a combination of people with cash who were looking for good rotations down to come back into the market. And that's one of the things that's really been, I believe, supporting the market. I don't think there's that many shorts out there, at least professional shorts. I do think there's a ton of people with cash, and I think they're using the dips to put the money to work. They have done so repeatedly. So the last piece I want to leave you with is a mental note. When you're trading this, if you got your butt kicked, This was choppy as hell. This was hard to trade. The attraction is that you can make a lot of money really quick. The reality is for most traders that their stops don't survive the reaction. In other words, look, this zone was actually properly placed, right? It just traded through quick reaction. It would really suck to come in here, get nailed with a 2-point stop, only to have it stop right at the tick and come back up the other way. The last piece, the other piece of that was your emotional capital. It costs a certain amount of emotional capital to stay consistent. If you're going to spend that worrying about this might happen, and I used to, right? I used to get worried that I was going to get run over and have large size. I used to try to trade this stuff, and inevitably, I could not, when the time came, make the decision between increasing my stop and decreasing my trade size. I never could seem to get the right combination. Traders I've worked with have struggled to get the right combination. For every one of these that they end up catching on the downside and having a huge move to the upside and getting paid, they've had 2 or 3 where they've got swept to the downside and had their stops run over. Or they've been in situations where they've gotten multiple stops both ways trying to set up trades, and even trap trades, right? Got difficult afterwards. They try to trap above here and push it up. We try to trap against the prior Tuesday's low, and then if you took this trap trade, right, you're still sitting here, but look at the rotation down, 1855 all the way down to 1852 and change, and we could easily come back to this 1850 level, or even all the way down back down to initial support overnight. What you need to survive this trap is a stop all the way down below here. So given the normal scales that we trade with, this is just a very difficult way to make a living. Anyways, I try to do that as effectively as possible. Does anyone have any questions? Because I'd be happy to answer them. I think really the focus for me in my coaching, at least, is to do the things that get guys profitable on a consistent basis. That usually means they're doing a lot less than what they were doing before they were working with me, and it also means that they are, but it also means that they're staying consistently profitable from week to week, and on days where, and they've ended that cycle of having to constantly dig out of holes, and instead, usually the process is that they're losing money. They get to the point where they stay break even for a while. Once they've got break even down, they are able to make the mental adjustments to get to consistently stack trades in, and they get over the agitation or the frustration of some days just sitting there and doing nothing and waiting for the rotation to come to you. In my eyes, it's better to wait for one trade that gives you 2 points at a good rotation and pays your trailers in addition than it is to try to catch 5 trades for 2 or 3 points and then have one trade that wipes you out for 4 points. That sucks. Getting good trade location means everything to me. Guys, fire away with questions if you have any. I'll give it a minute. If I don't hear anything, we will just bail. Okay, it doesn't look like anyone has any questions. Guys, I guess this is the note I'll leave it. I'll leave for y'all. If you're trading and you're trying to get consistent, no matter what you're trading, whether it's oil, gold, ES, TF, all of those markets have their own unique rotations that are unique to them. They have their own rhythms that they trade to, and like for example, right, while ES was holding up fairly well, look at let me see NQ here real quick. Okay. If you look at NQ here, right, this looks somewhat tradable, but I want to show y'all something. If you go to a 1-minute chart, okay, most people I know have a pretty hard time swallowing a 10-point stop on NQ. They want to trade it with 2- and 3-point stops. Okay, so after the number came out, look at the size of the whips on this thing. If you're trading NQ, look at this. This is a 1-minute bar. In 3 minutes, it traded from 38.85 all the way up to 36.98. That's almost a 15-point range in 3 minutes. okay? If you were trading with a 2-point stop, let's say you thought this was a good trade location, and you took the long at 36.88. If you used a 2 or 3-point stop, this thing basically tagged you out before snapping up. If you chased and you thought, oh, we're going to go back and go back to the highs of the day, right? You snagged it here. 3 minutes later, it's trading from 36.98 all the way down to 36.90. That's $160 a contract. You're in the hole and you haven't been in the thing for 3 minutes. Not only that, but you got false hope if you held on, because people look at that and they go, oh, almost a hammer. We must be, we just did a backside test, Globex lows, we're going to go back up. And if you waited a minute, you say, hey, I'm going to wait a minute. You're trading without stops. And you go, hey, I'm just going to wait a minute. Look at this. This fell from 36.92 all the way down to 36.82. You're another $200 in the hole waiting 2 minutes, right? That was basically 5 points a minute or $100 a minute to wait. The anxiety that this produces, right, when you were just coming off a range like this, right? This was the trap in the morning. Let me show it to you. Where were we? Right here. We trapped here. Compare the range. This is. Hold on 1 second. I'll just tell you. Okay. So assuming you took you didn't wait for any kind of rotation back, depending on what your entry style is, right? This is 36.93, and your stop, right, would have been 36.88. That's worst case scenario. That's approximately a 5-point stop. So 5 and a tick would have kept you in the trade, or $100 a contract. And then look at your reward. If you came in and this was your worst possible fill right here, right, 36.93, you then rotated all the way up to 17.02, 10 points. So you had a 2-to-1 risk reward ratio, assuming you couldn't get any better fill. And I can tell everyone this would not be my entry right here. But assuming you couldn't get any better fill, and then the most heat you took, assuming you got the worst fill possible there, right, was 36.89. That's 4 points or $80 a contract to have a potential of $200 a contract on your risk reward. That is, okay, so that's not terrible trading, although it was choppy as hell, right? Now come back over here and look at that same thing and think what your mind goes through when you're trying to navigate through this mess right here, right? You're thinking, oh, I've got a bottom, and look, in 1 minute, right, 2-3 minutes up, you went from 82 to 98, 88. So that was, you weren't quite at $100 a contract, but you did pretty well. But if you hesitated for just a minute, you already came halfway back. If you waited another minute or two, you actually came back to test this area again, and you were like, man, should I stop here? Should I not stop here? You waited another 2 or 3 minutes, you were back up, and what you're doing here when you're trading this stuff, for most traders, obviously this doesn't fit everybody. Some people are actually quite disciplined. But what most traders are hoping for on a day like today is that they're going to nail this thing, and it's going to fly to the other end of the range, and it's going to break up to the upside. I know that's what I was thinking. I can tell you, when we did this and we didn't flush right out of the gate, I was thinking they're going to trap everybody. I think I said as much, and they're going to push to the other end. And I can tell you, I'm not asking for any confessions or anything else like that, but I've worked with enough traders to know that's exactly what you're thinking on a day like today. Because if you're not thinking home runs, right, why are you taking the risk of getting slammed like this here? And then what other traders do is they go, there's no way, right? They look at it, they see everyone's comments, it didn't flush. The other thing they do is they go, there's no way this is going to keep going down. But at this point, you're from 85 to 50. If you held this, and I don't believe very many retail traders held this, right? But if you held this, you're talking about holding, what is that, 35 points, $600, $700 in losses. Flip that now. You go, oh, it's 1430. We've barely bounced. We haven't bounced halfway back. I'm going to take the short here, right? Because you're thinking low of the day on the close. So now you're sitting there and you go, well, I'm not going to get impatient with this thing. If you shorted right here, thinking low of the day, and let's say you got a perfect fill at 36.70, you're in the hole at one point for $200 a contract, right? That is very hard on people mentally. And then you got to come back tomorrow and deal with what? Your normal 5 to 10 point ranges. And if you've gotten your butt kicked today and handed 20 or 30 NQ points, out the window, right? You've got killed. In addition, and I want to point something out. Let's say this is taking place in the morning on a normal day, right? And look at this stretch. Look at the psychological advantage you put yourself in versus everyone else. Even if you were sitting here, right? Let's say this was the AM open, right? You avoided all this mess. You waited for a good stretch, okay? And you knew your zone was here. And basically, this particular chart that I was showing was stripped of everything but the most essential zones. It was pretty much just a skeletal chart that I was working off of for today. Even with all of this, right? If you're look and you're willing to buy at almost 50 points down, right at this 36.5250, right? Think how far and how many people have already panicked out at this point. And now you're sitting in the capwork seat. You can scale at your 10 points, right? Or even at this 36.70. Leave a trailer. You can leave your stop at break even and see where it goes. Because for all you know, tomorrow morning, NQ opens up right back here at 3,700, maybe even 3,710. I'm not saying it will happen. I'm just saying it's not unreasonable because markets tend to travel from one end of the range to the other end of the range. We'll see tonight what it does, but that's certainly a possibility. Anyways, that's pretty much the story, guys. And do you have any questions about that? Did it all make sense? Okay, great. I'm glad that helped out. And anyways, my best advice to most retail traders is don't trade Fed days. It's just not, for me, it's just not worth the anxiety for it. If you have to trade it, get wide, have the discipline not to trade this crap so that you can be around to get this if you're going to trade it, right? And the other side of that coin would have been something really 3,700. I would have looked at 3060. I would have looked somewhere between here and here. 3750 to 3760 would have been the equivalent area. And so anyway, I didn't think we were going to get that. Had we gotten above here, I would have thrown these zones up here, but there was no need. I didn't think we were going to do it today, so I didn't bother with it. So anyways, y'all can join me in the morning and get an edge on the day. Make sure that what you're trading, hold on one second here, I got to respond. Whatever you're trading, whether it's stocks, futures, ETFs, make sure that you have your entry, your exit, and your stops predefined, that you have the discipline to stay with those, and you have the discipline to stay with them and take your stop and not freak out about it, right? Accept the risk in the trade. And then lastly, make sure you really have an edge, right? If you're following someone else blindly, you're in a chat room, you're subscribing to a service, and you don't understand how they came up with the numbers or how what the risk tolerance is, you are setting yourself up for failure because your mind will not be able to accept the risk for, let's call it, for 50% of the people who are trying to do it. And that's why people don't stay with trading rooms and they don't stay with subscription services on a day trading basis, because it's just too nerve-wracking. There's no mechanism for increasing trade size or decreasing trade size. And usually when whoever is talking about what their parameters are for risk and not what your ability is to assume risk, and you're forced into an uncomfortable position. So anyways, guys, have a great night. I'm out. I got a coaching session I got to jump to. If you have any questions, you can email me at tradeandperform, all one word, at gmail.com. And have a good night. See you guys. Hey, brother. How